When we started the training, there's so many aspects, and it's like learning to drive a car. If you get in the vehicle the first time to drive, you're trying to figure out what must I do? What must I do? Must I put the car in gear? Must I push the clutch? Must I put the petrol? Must I turn? Must I hold the steering wheel? And this is what happens. A lot of people get stuck. I mean, they don't want to proceed further, or they only get to learn to drive an automatic. And an automatic car, you never get to, especially if you're a youngster. When we were young, we used to dice. We used to race each other. We made sure that um, there was we got the maximum out of our vehicles. So what we're going to do is we're going to try and get the maximum out of our vehicle and the available charts that we have. We started by saying, let's try and see where are the support and resistance lines. So if I had to maximize my screen, I'll just close the volume there so that there's no interference. And I had to now go and say, all right, let me put the lines on the screen and see there's a line coming down, and there's basically a resistance line. And there's actually more. So if you can put your resistance on top of candlesticks to see certain patterns unfold, you also want to put horizontal lines. It gives you an idea, or gives the trader an idea of where this market is going. So at that point, if I put the bottom and the top, I'm almost in a parallel channel. The price of Bitcoin is in a descending channel, which if I put this on, I can then actually show you that this is what's happened with the price. So I'm just doing the half-an-hour graph, and that goes back to let's see, the 11th of, or exactly a month. So in the last month, we've seen the price of Bitcoin drop drastically. And of course, we can see that it did try and break through the resistance line, but it's gone further down. So just with this tool alone, I can establish that we have a downward market. There's possibly a further downward movement. Doesn't really, once we get to understand how these markets move and their patterns, then we actually have a better idea, and as we gain experience of where this is possibly going. The other upside is that it could try again and break through there and then just go back all the way up to the previous resistance line or the previous high, because every high turning down is a resistance line. And as we'll learn in other, we got a head and shoulders over there. There's the head, there's the shoulder, there's the shoulder. So head and shoulder means a downward trend. So are we seeing more head and shoulders happening over here? Possibly. But that was our first tool. One of our other tools that we're going to start using is the Bollinger Bands. That was the first tool we started using. So if I click on Bollinger Bands, then I can see, let's make it full screen again. I can see as a day trader, somebody that's trading on a daily basis, I've got a trading range. Sorry, I need to just get this. The Bollinger Bands, from where the price is, the high that can go is 2%, and the low is very small, 0.26%. I'm not too concerned about the low placing orders percentage-wise down. If I look at my support line at the bottom, it can go down another 6.8%. Now, I told my traders that are on my tribe and my signals group that the Bitcoin price, and this was the beginning of this month, the Bitcoin price can possibly fall another 10% in September. And it's already dropped a possible 3% of that 10%. So we just look at trends and patterns and stuff. So we've just used two tools now, which gives us a good idea of where the market is going. And as we said, we want to combine the tools because not all the tools tell us the same thing. The one tool says the price of Bitcoin is possibly going to break out and go higher, back to its previous high. The other tool, the descending channel, because this is a parallel channel, is telling us we could go as low as 1.83 million rand per Bitcoin. And so those are tools we want to combine the tools to see how effective we can be. My next tool I'm going to use is RSI, Relative Strength Index. And then I'm going to open full screen again and see where does the Relative Strength Index tell me where we are. We are in the 40% range. We are not in the high area for a 30-minute graph. We are in a low area, but the low area means we could still go down to 28%. In other words, the price can still do this and most likely will. Then we have the parabolic SAR. That was the next tool we use. So what we're doing now is we layering one indicator on top of the other. Whenever I see traders, after I've taught them to trade, I see them putting only certain tools on their screen. They don't use all the tools because they don't like certain tools. They're just too lazy to layer the tools. And because they're trusting that the one or two indicators or tools they're using are great, and they end up not really doing well. So you end up making more mistakes than the average trader because you're not disciplined. So whenever you're getting into a trade, there's no rush. There's no rush to get into a trade unless, of course, we're sitting in December or November when there are these huge bull runs and you just want to get in and trade. But still, you want to go and look at the RSI. The RSI is telling you there, you don't want to keep trading over there. This is the buying zone. From 40 downwards is the buying zone. But we're on the wrong graph. We're on the wrong setting. So what we want to do is let's have a look at this on a 1-day graph. Make it full screen. We just want to get perspective if we see the price. Sorry, I just had to mute some of the folks. All right. So as we see, what's happening here is that there's a downward channel. The Bollinger Bands on the 1-day graph tells us, hang on, that's how high it could go. But this is how low it could go, down there. But then we have some more support lines that we need to be drawing on the screen. And that is down here. Almost where this parallel channel is, say. That's the most likely place it would go. Now I'm going to show you something that most traders don't teach other traders, is that on your RSI, we're already on a downward channel over there. It's telling us that most likely we're going to end up dropping a considerable amount. And that's very good news for traders that are new and traders that are trying to get their money together so that between now and 21st of September, they could just go and buy some cheaper stock. And you're going to do it with other coins also like Shiba and Tron and Dogecoin. Those are the coins that are very cheap. And you don't have to buy one Bitcoin. You can buy 5 rands of Bitcoin, 10 rands of Bitcoin, 50, 100, 200,000, 2,000 rands worth of Bitcoin at any given point in time. But our tools are saying, hang on, we are in dangerous territory. So you see, I've layered some of the tools, the indicators on already. We've got several indicators. Let's add the next one, which we call the Fibonacci. The Fibonacci is one of the, and it's got nothing to do with the Nazi, but it's the way you kind of can remember it. So Fibonacci is over here. Let's add that as a tool on the screen. See, when I put a star next to it, it adds it there onto my little toolbox. So all the tools that you're going to use on the left side of the screen, you can add in the toolbox. The ones that are at the top of the screen, let me just move this away. These ones you can't put in the toolbox. These ones you have to take out. These are over here. There's lots of other tools that we teach that you can use, but I'm using the most simple ones to make effective trades for now. You don't need 20 tools because the more tools you use, the more confused you can get. So let's make this full screen again. All right, so we see there's a resistance line on the Bollinger Bands. There's a resistance line on the general downward trend. There's a support line. There's the parabolic SAR. The parabolic SAR is different on the 30-minute graph. On the 30-minute graph, it's at the top. On the one-day graph, it's at the bottom. What does that mean? It just means we're working with different time frames. And the different time frames, we need to look at a 30-minute, a 1 hour, a 4 hour, a 1 day, etc., etc. Because if I had to put this whole graph setup now on, let's say, a 1 month graph, you're in for a surprise. Let's make that full screen. Our 1 month graph is telling us, hang on, we're too high. We've got possible head and shoulders over there, and there's the shoulder. The head is always higher, and there's another shoulder. So most likely we are seeing a drop, possibly down to the extension, because this might go like this. Something like that. So we might see not just 6% drop, but we might see, let me just use the relevant tool. We might see a drop, 50% drop. Wouldn't you all like to buy Bitcoin at 50% discount? Yes. But what if it drops? Yes, we all want a discount. And that's what it's about, the market is about. I don't want to just buy Bitcoin just to have Bitcoin. I have traders that I'm helping trade, guys that I'm sitting on the screen helping them make decisions to trade. And look, I'm not a financial advisor. I probably have a lot more experience than most financial advisors on the market in the last 10 years, but that doesn't matter. What matters is that I need to help people understand that holding on or hodling, I don't know if you've heard of the word hodl, hold on for dear life. Hold on for dear life is okay if you don't get emotional. Hold on for dear life is not okay when you get emotional when you log in every day on your portfolio. So I say, if you had to sell all of your Bitcoin at the current price and buy at anything from 6 to 50% lower, wouldn't wouldn't you be able to buy 50% more Bitcoin because you sold high? I mean, if you were running a shop and you were selling 2 liter Cokes, and you knew that Coke is going to be on special at 10 Rand, 10 Rand a 2 liter. Why don't you like have a quick special and sell all your 2 liter Cokes out to use the money to buy another bunch of Cokes at half the price? That's exactly what this is about. Now, I can't expect anyone or every one of you to believe or to follow my thinking. I'm just teaching you tools, and then once you've used the tools, how you can make them work for you. So on our parabolic SAR right now we've got our RSI where the market is telling us we are still too high. We're on 65%. 70% is like this is almost like your safe zone between 40 and 50%. But when you start going up to 70%, you are in dangerous territory. If I had to draw a resistance line going down on this, we can see there, there, and there. So because it didn't make it the second time or the third time, guess what? It's most likely to go and drop even further. Now, I could be wrong. All of us have been wrong in our lives, and very few people always admit that they're wrong. But I'm just looking at the different tools. And why am I saying this could be? Because we have a special event. When I did the moon phases and the seasonal changes with you folks, I showed you the tool of the equinox. So let's go to, okay, that's a 1 month graph. Let's change this to a 1 day graph so that we can have perspective. Because I can't use this tool on a 1 month graph. It's at the bottom of, you see how squashed it is there because I've been playing around with it. If you want it to be that in perspective, you go to the bottom of the screen and you click on auto. See at the bottom of the screen it says auto, and then you got the little settings and log and percentage. Just click on auto. So this month, like we had a eclipse, that's one of the things I teach in the courses. That's why bit by bit we teach people to look at what the seasonal changes are and of course the moon phases, because we always see huge market drops after eclipses. Eclipse, to go in detail and explain it is like you just want logical answers. No, you're not going to get a logical answer because it's an emotional event. It changes people's emotion. Have you seen how many people lately have had health problems and been sick and have gum disorders, have to be dentists are full? Just think of it that way, and then you can start thinking, how can we start adding that up to the changes in the market? And all of this is emotion. This is showing you the emotion of people. As the prices go up, people are excited. As the price goes down, people are sad, that people are dumping. That's bear markets happening. So we want to look at what are the natural seasonal changes that we can look at. So around the 21st, of this month. There. That's where we call the equinox. When we go further into December 21, and that's why celebration time for all the pagan religions were the highs of the year, 21st of June, 21st of December. We just made it the day after the sun rises from the dead. Okay, that's another story. So we have this price dropping and then rising. So we would expect that from 21 June, which let's draw a line here, 21 June, that should have been the high. But be it as it may, we would still see this as the low. And we are on time wherever that low is going to be, there or there. We are on time to see a low again. So I've used now moon phases, I've used parabolic SAR, I've used Bollinger Bands, support and resistance lines. One of the best tools always to use to start off with is use your support and resistance lines. Now, I just want to show you something. When I click on that flat line, another little box normally pops up. Let me just see if I just put it here. You see this little box. I can now change the color of that line. I can change the thickness of the line. So let's say I don't want it too thick, but at least I want to see it. So then I click there. That looks good. It's not like the little blue line there and there that you can hardly see. So you can you can even change it to what the Afrikaners call stippellyn. It's like a little dotted or dash, dash, dash. You can change it to bigger dashes in between. And then, then you can sit and have a look at it and say, all right, that's where I want to buy. I'm going on holiday for a week or a month. I'm going to Mauritius. I'm going to Zanzibar, whatever. I've got one of my traders who's just landed in Zambia a few hours ago. His orders are in place. He's going to make money while he's on holiday. So that's the beauty of trading, is that you can place multiple trades, as much money as you want to, in the market, and then when the markets go down and you got lower buy orders, it just buys it. When it goes up and sells, it just sells it. Well, so there we have the basic tools that we've gone through so far. I think we've covered most of the tools. Is there anything that you folks want to discuss at this point in time? I don't want to go overboard with explaining and then I'm missing somebody's question. I'm not sure if you can unmute yourself. If you want to unmute yourself, you're welcome. Otherwise, write in the chat box.
Evening,
Yes.
Raul. This is Yusuf. Thank you very much. Raul, just a question on the graphs that you're using. In order for one to be able to start using these parabolic graphs, must you sign up with do you have to sign up with the trader?
No, there's.
In other words, how do you obtain these graphs? That's my question.
All right. So there's different levels of doing this. I have actually just used a graph without logging in to the graph, into the exchange. So with Altcoin Trader, I always tell the people I've got a sign up link that I send you. You use that sign up link, and then if you have any issues with your FICA and registering, then I've got a one-on-one with the exchange. But if what people do is the normal thing is you sign up with the exchange and you don't have a middleman. You this is what the beauty of cryptocurrency trading is there's no broker, there's no middleman to ask permission to withdraw your money. If you want to withdraw, you just go through the security measures, or if you want to add money to your account, you can use your Capitec card, the Capitec Pay, and the money shows right away. If you use any other bank, then obviously it takes the time for the bank to show your funds. So you can use this graph. Let me just exit full screen to show you. You can play around with this graph. You see, I haven't even logged in yet. I haven't even put in my username and password, and I've been using this to explain to you how this works.
Okay, great. Thank you.
Great. And I know not everyone always has the time, the Tuesdays and the Thursday times. There are the recordings. Everyone's welcome to, go over the recordings again. I have full-on courses, the altcoin trader courses, that's quite a few hours long. It's like 4 hours long, and then there's some practical examples that I'm giving for 997 Rand. So just contact me privately should you want to do that, and there's no time limit to how quickly you're going to finish that course. And I think what I've always done is when I've been signing up with any course, I always want to do the free course first, get confidence in knowing that the person knows what they're talking about, and then I start buying them. So, I mean, we do this like pay as you go kind of thing. From the beginning, we had level 1 to level 7. And one of the traders the other day said, "No, I've done enough of your courses or all the different kinds. I just want to buy the whole lot." And he paid 4 grand for all the courses I've ever presented. I mean, the level 7 courses, the traders course where we teach the market cycles, that is a 200-page document. So I don't want to overwhelm you with, information and too much in the beginning, because it's like somebody going to do a learner driver's course on a racetrack, and you've got a racing driver teaching them, how to slip the clutch and how to snap change and stuff like that. It's just not going to happen. It's going to be too overwhelming. But we've got even what we call a baby traders course, and I'm trying to base all of these lessons on baby steps trading, because the stuff that you see in front of you, if you haven't practiced it yourself, then it becomes too much. As if I had to now just like exit full screen and I had to just refresh the screen, it would just wipe everything off. So if I don't want it wiped off, then what I want to do is I want to actually I want to right click on Altcoin Trader and open it in a new tab and do my drawings on one screen and the other trades on the other screen. Why do traders use more than one screen? Because you can keep one screen on the left and one screen on the right, and you can observe more than one thing at a time. It's like having a control room. Anything else, folks?
Evening, Roll, and evening, everybody. Roll, my question is about the stop loss and take profit. What's your take on it? I listened to someone on was it last week, advising like it's not a good thing to use it, but saying also it's a good thing in terms of managing your finance. So what is your take on it?
All right. So in this case, thanks for asking that question, because I forget sometimes to actually use those terms. On this exchange, there is no such thing as a stop loss. We don't use stop losses on this, and it's simply because it's spot trading. So So for those who are not haven't traded before, stop losses are used when you're using a denominator in the market to. So let's say, for instance, I'm putting a trade in to go up. Let's say I want to sell there, but the market actually takes a dive. Then the stop loss says, okay, when it dives, let's say 1 or 2% lower than the price, let's say 1.5% low, that it sells it there. There are no tools on this exchange for that. And the simplicity of this is the reason why people use stop loss is because they go when they went and placed this first trade, they were doing margin trading or leverage trading. Let's say they said they want to make 2% out of this trade. They would go 1 to 25 or 1 to 10. So if they said 1 to 10, they would make 20%. If they said 1 to 25, they would make 50% on this trade. But the thing with stock market trading is that when it goes the opposite direction, you lose 1 to 25 or 1 to 10. With this, that doesn't happen. So let's use an example, XRP. And yeah, this would, hopefully I can simplify this. So you go into the market now and you got 52 Rand. You put 52 Rand on XRP and you say, I want to, and you don't have to sell it at all. You can just hold it. So where if you're trading the stock market with gold and silver and stocks, you're not actually buying the gold and silver, you're just betting on the price. In cryptocurrency, you actually hold, you can withdraw this, you can put this in a wallet, you can put it in a flash disk and hide it. So let's say I took 52 Rand and the market, I wanted to sell it at 54 Rand. I wanted to make 2 Rand on this price. Then I say, when it gets to 54 Rand, I'm going to sell it. But instead, it drops down to, let's say, 49 Rand. I'm just saying worst case scenario. Most likely case scenario at this point. If it drops to 49 Rand and I sell it at 49 Rand, then I get 49 Rand back. So basically, it's taking real stock. Let's say you buy a chair and you buy the chair for 200 Rand and you try and sell the chair, and then after 2 months, nobody wants to buy the chair and you sell it for 180 Rand. So you've lost 20 Rand on your chair. So that's why there's no stop losses needed here, because you're just selling it at a percentage lower than. But here's the mistake that lots of traders make, is when the price drops, they sell. And that's it. You don't sell. You wait for it to go back up again, because all the cryptocurrencies will go back up again that are good projects. So you don't lose anything. It's just the value of your stock is not now 52 Rand anymore, but 49 Rand if you decide to sell it at that given point in time. So that's why there's no stop losses here, because we use spot trading, spot price. So that's when you look at gold and silver, people will say, what's today's spot price for gold or silver? And one of our best markets to trade is silver at the moment. It's called XAG. It's been running a very low prices. Let me just put this on a one-day graph. It's run right down to 684 Rand. So everybody that's buying silver now is going to make money, because the price of silver is going to go sky high. That's a given. Silver goes in the opposite direction of the stock market. As the stock market crashes, we're going to see a 50%, minimum 50% increase in silver price and higher. All right, folks, we've got 1 minute left. So if there's a quick question, we can talk. Otherwise, hopefully you've all gained something from this. We'll put the recording up for you to listen to watch. Right. Got my video on again. So I've not logged in at all. And yes, you don't need to log in to get all these tools. They are available. Thank you, Mary. Have a good night, everybody. Thank you, Willie or Billy. Bye for now.